Okay, so the market's taking a nosedive, and let's be real, everyone's kind of freaking out. But what if I told you there are two completely different playbooks for not just getting through this, but actually coming out on top? We're going to break them both down right now. 5%. That's how much the S&P 500 dropped just this last month. Now, that might not sound like a huge number, but trust me, in the world of investing, that is a massive gut punch. It's a clear sign that right now, fear is in the driver's seat. But here's the crazy part. While most of the market is bleeding red, some stocks are absolutely soaring. Get this, one company's profits just shot up by a staggering 111%. Yeah, you heard that right. And I'm going to tell you exactly which company that is. But you gotta stick with me till the very end. So what's got everyone so spooked? Well, on Wall Street, they call this the wall of worry. And that's exactly what we're going to do now. We're going to look at that wall brick by brick to see what's really going on. First up, geopolitics. You know, whenever tensions start to bubble up in places like the Middle East, it sends these ripple effects across the entire global economy. And the stock market? Yeah, it's pretty much the first to feel those shakes. All right, next on the list is rising interest rates. And here's the real kicker. It's not just stocks getting hammered. Even the things that are supposed to be safe, like bonds, are going down too. It seems like the market is finally getting the memo that higher rates might be here to stay for a while. And last but not least, we've got the dreaded B word, bubble. Seriously, some of the top strategists out there are looking at stock prices and saying, this looks like a balloon that's been blown up way, way too much. And we all know what happens next, right? Pop. So yeah, that's the storm we're facing. It sounds pretty grim, I know, but here's the thing. Every storm has a calm center, and that is where we find our first game plan, hunting for some serious bargains. This is what we call value investing. And honestly, it's kind of like being a treasure hunter. You're not chasing after the flashy stuff everyone else is buzzing about. Nope. You're looking for those incredible, solid companies that the market has gotten scared of and just tossed aside. Real hidden gems. And just take a look at some of these names. We are talking about absolute giants. Visa, Unilever, Progressive, companies you know, maybe you even use their stuff every day. And they're all trading near their lowest prices in a year. For a value investor, this is like finding a map where X literally marks the spot. But you gotta be careful. There's a huge danger here, and it's called the value trap. That's when a stock is cheap for a really, really good reason, because the business is actually in trouble. It's not a bargain, it's a trap. And the real skill is figuring out the difference between a great company on sale and a business that's, well, dying. Okay, so maybe digging around for bargains isn't your style. Maybe you're less of a patient treasure hunter and more of a rocket pilot. If that's you, then you are going to love our second strategy. Welcome to the world of momentum investing. The whole idea here is super simple. Find the stocks that are already going up, the ones with all the buzz and energy, and just jump on for the ride. The core belief? Winners just keep winning. And check out some of these high flyers right now. You got companies like Micron Technology, which is just exploding thanks to the whole AI boom. Then there's Franklin Covey. I mean, come on, it's up 44% in just 1 month. That's just wild. Now here's the risk. These rocket ships can be incredibly fun on the way up, but they can run out of fuel. When a trade gets too crowded with too many people piling in, it can reverse, and it can reverse fast. So yeah, this is definitely not a strategy for the faint of heart. All right, so there you have it. Two totally different paths to navigate a shaky market. Are you the type to dig for buried treasure, or do you want to ride the lightning? And that, of course, brings us back to that one big question I left hanging at the start. Remember that company I told you about? The one with that incredible 111% profit growth? Well, which strategy do you think it fits? Was it a forgotten value stock that suddenly woke up? Or was it a momentum rocket already headed for the moon? The answer is Ciena. Now, you might not have heard of them, but they are a huge player in the world of computer networking. And they are a textbook example of a momentum stock that is just absolutely on fire right now. I mean, just look at these stats. A 111% explosion in their earnings per share. Revenue is up 33% year over year, and they're stealing market share from their rivals. It is a classic momentum story, and it's all being fueled by this massive wave of demand for data and cloud computing, thanks to, you guessed it, AI. So that brings us to you. Now that you've seen both sides, which one are you? Do you see yourself as a value hunter, patiently searching for those hidden gems? Or are you a momentum rider, ready to jump on a rocket and see where it goes? I'm genuinely curious. Drop a comment below and let us know.